Everybody get up!
It's 6:17 this morning as we get this. Come on, it's Tuesday already. I know you're kind of groggy right now. Yesterday was off. Got to get back into the grind today. So technically it's Monday, Tuesday.
It's like passing go and collecting $200. You got to skip Monday.
I know, right?
Yeah.
So hump day's here tomorrow, and then you're on the downhill slide already.
I'm
See, it's
loving
almost
it.
You're almost there. You're almost there. So today at noon, I was just saying a second ago. Where did I leave my notes? At noon today, we have our podcast coming out with Michael Kahn. Michael Kahn's a certified market technician, and we've talked about technical analysis in the past, and a lot of people kind of really kind of dismiss the value of understanding what price is telling you, and they kind of look at other stuff, which is easy, right? Nobody, the interesting thing about investing, and this is. It's a very interesting thing to watch and to really understand, and is that investing probably has to be one of the most complicated games on the planet, right? I mean, people go to college to be doctors and lawyers and pharmacists, whatever it is, and we study this craft that we want to do with our engineering, right? So we go to college and we learn to be an engineer. So we spend all this time studying to do what our career is, and yet we approach investing with this very cavalier attitude. But investing is probably one of the most complicated games on the planet because, it's politics, it's geopolitics, it's economics, it's inflation components. It's so many different measures, and most importantly, it's a lot about psychology, right? What do people think? What do people feel? How do people act? So it's this very complicated game that we take our life savings and we throw it in the market and we go, well, I kind of hope it works out okay. And, and we buy off onto these attitudes that are presented by Wall Street, which is, just buy and hold, ride the markets up and down, I'll be fine. Over the long term, it's going to rise with inflation. There's some truth to that, but there's also a lot of big fallacies to that because of the way that money works over time. And a very simple process, which is simply that getting back to even is not the same thing as making money. But this is often kind of overridden by Wall Street, who has a real desire for you just to invest money and leave it because it's an annuity stream for Wall Street, not for you. They charge you an annual fee. You pay the fee. Doesn't really matter if you make money, but they make money. And this is why Wall Street's a billion-dollar business, multi-billions, $1 trillion business. And a big chunk of that is a structure that Wall Street has created to sell product. And again, we it's always interesting that when people hire a real estate agent, you really know what you're kind of getting up front. You know that you're going to hire this real estate agent and they're going to charge you 6%, roughly 3 and 3, to sell your house. And of course, we're going to see those commissions come down a lot in the next few years. But, you really understand the relationship. They're going to sell your house, and if they sell your house, you're going to pay them a commission. End of story. And there's really a very clear understanding of that relationship going in. It's no real surprise, right? And it's interesting that the same structure exists for Wall Street from the standpoint that they're going to sell you a product, and you're going to pay them a fee. But there's this belief that Wall Street's there to take care of you, and that, I'm trusting Wall Street to make sure that my money grows and I can have retirement down the road. But that's not really their incentive. And there's study after study. Look, this isn't anything new. I mean, there's study after study after study that tells you this, right? Where does the client fall into the order of importance for Wall Street? And they're at the very bottom, right? Institutional firms, pension funds, et cetera. Those are all at the top of the list because that's where the money's made. He who makes the most money for Wall Street is the most important part of the Wall Street business. That just makes sense, right? Wall Street is a business. So it's interesting to me that people take their life savings, they throw it into the stock market, and they go, I kind of hope it works out all right. But they really don't take much of a vested interest in really learning and understanding how it works. And as a function of this, because what technical analysis tells you in terms of understanding what price is simply a reflection of what happens to investor psychology. What are investors thinking today, right? If I'm going to go play poker in Las Vegas and I'm going to go bet on a poker hand, right? I'm going to look at my cards first, and I'm going to say, wow, I've got a pair of twos, or I've got a full house, or whatever it is. And when I understand the cards in my hand, I then mentally assess odds of my chance at winning. So if I'm looking around the table, and as the old saying goes, if you can't spot the pigeon, it's probably you. But if you look around the poker table, if there's 5 or 6 people at the table, they've all got 5 cards, there's 52 cards in a deck, I can pretty much quickly calculate my odds of winning if I've got a pair of twos. Odds are that somebody else on that table has a better hand than I. And that shouldn't be really surprising, right? People can calculate that pretty quickly. Now, if I've got a full house or a straight flush, etc., my odds of winning are exceptionally high. And so what am I going to do? I'm going to bet more. But when it comes to the stock market, we are simply taking money and we're investing it without any real understanding of what the odds are of winning. In a lot of cases, we just kind of put it in there and hope this certain thing happens, which is that it goes up. So what technical analysis tells you, and this is what we spent some time talking with Michael Kahn about in particular, is what does price tell you about the markets? And while a lot of people kind of, poo-poo technical analysis and say, it's just voodoo, it's witchcraft, right? It's simply because they don't understand that all price is telling you is what is the vast majority of the herd thinking, right? So if prices are rising and they're trending higher, most people in the markets are betting on prices continuing to go up. And there's points to where those messages become much more clear. And we talk about this a lot on the show. We'll say, look, market's gone to here, take some profits, reduce risk. Markets had a big correction. Like right now, we've had a decent correction over the last couple of weeks. You can put some money to work here. We're adding we've been kind of shifting some exposures. If you go to our website, realinvestmentadvice.com, click on our newsletter tab. I actually went through an analysis of what we're doing in portfolios right now. We've been changing up our structure a bit because of where we are in the current market cycle, right? So we're adding money to defensive positioning, taking money out of offensive positioning, reducing risk, rebalancing risk across the portfolio. Now, a lot of that has to do with what prices are telling us, right? So anyway, we talked to Michael Kahn about this, and people just assume that technical analysis is too complicated, right? And it's just this voodoo kind of witchcraft thing. But you listen to the whole interview today, but let me leave you with this clip real quick.
Technical analysis shouldn't be used to predict the future. It should be used to manage risk, as you just said. There's only one thing that you can control in the market. It's what you do, whether it's buy, sell, or hold. And you boil down technical analysis, and you're just going to get a probability of what you think is going to happen, and then you make a decision to buy, sell, or hold. So I'm not going to say the S&P is going to 3,000. I'm not going to say it's going to 2,000. I just want to know buy, sell, or hold. That's all I can control. So if you look at it like managing risk and helping you make the decision, and if your primary decision-making method is fundamentals, great. But this will help you make that decision.
And he's right. Fundamentals always tell you about what to buy or what to invest in, right? But technical analysis can tell you when that fundamental investment is a good opportunity. We can buy a really good fundamental quality company at the wrong time and still lose money. And our goal is to try to minimize the risk. And again, using technical analysis doesn't have to be complicated. I mean, we're just talking about, kind of understanding the basics of a moving average or kind of what's driving the trend of price over time. But employing a little bit of just basic technical analysis to your 401k plan, to your investment portfolio, et cetera, can help you avoid, big losses. And again, if we spend a lot of time, there was a very interesting article talking about retirement and how much money you need to save for retirement. And it's just this continual, what can I say to make it the most easy thing ever? Oh, just save 10%. You'll be fine. That's the magic number. Save 10% of your money and you'll be fine. You're not going to be fine at 10%. You can do the math and you can calculate that you're not going to be okay at 10%. And so in order to make these articles be very positive and assuming, so you read this article says, just save 10%. You say, well, great, I'm doing that. I'm saving 10% in my 401k plan. And if you just, attach to that a 10% annual return over the course of 30 years, you're going to be fine. Right? Well, the problem is that nobody ever goes back and actually does the analysis that says, okay, what happens when you have variable rates of return? Markets go up and down. You spend a long period of time getting back to even. But more importantly, everybody assumes that your cost of living isn't going to change in 30 years. So if you're, if you're making $30,000 or $40,000 today and you're like, oh, this is great, I'm getting by, I'm doing what I got to do, whatever the number is. If you have $1 million at 4% when you're 60 years old, you'll have your $40,000 a year to live on. Well, the problem is nobody ever comes back and says, what's that $30,000 or $40,000 you're making today? What's the equivalent of that going to be in 30 years? So we inflation adjust everything except our cost of living. And that's going to be substantially higher. And so the reality is that if we don't do something to manage risk, and this is what Michael Kahn and I talked about a good bit in the podcast, is about the importance of managing risk in a portfolio, because the one thing that you've got to do in terms of being a success in building your retirement savings and getting your retirement positioning put into place is to make sure that you don't spend long periods of time just getting back to even. Because that's not the same thing as making money, and that's not getting any closer to your goals. So go by the website today and click on the podcast tab. And if you simply go by there now, click on the YouTube channel. Sorry, I said podcast, but click on our YouTube channel and subscribe right there. In fact, there's a banner at the top of the page. We've got some banners that kind of go by. You subscribe right there. But once you subscribe to the YouTube channel, when we release this interview with Michael Kahn today at noon, you'll be notified of it by email. Click it, watch it. It's a very good interview. Kind of help you some understanding about how applying technical analysis to your portfolio can actually help make you money over time. And more importantly, keep you from losing. Be right back after the break. Video games, one of the biggest problems coming up in the world today. Got an interesting article on that as well. Be right back.
Catch Lance Roberts' podcast later at lancerobertsshow.com.